Alright guys, welcome back to NSTA and welcome back to another educational video which we started posting on every Wednesday. So this is I guess second series of it. So in this video today actually we are going to discuss a corrective structure. By the title you have already know by what we are going to discuss. So we are going to discuss a flat corrective structure which is derived from Elliott wave. Now before we start on this topic, let me tell you there are many people who give up on Elliott wave because they call it subjective, because we have to put a little more effort in order to understand the concept or in order to really implement this theory in the market, especially in the live market. We are doing it for years and we are doing it in front of traders every day in the trading room and getting tremendous accuracy and the results out of that. So backing that up, we are qualified to tell you about what exactly the Elliott wave is. We generally don't use it exactly the way it is in our analysis, but yes, the core foundation is taken from or derived from this topic and concept. Now, the many people actually give up on this topic, not because they don't understand, but because they try to implement that after just reading the book, or maybe they have taken a training which was just for 3-4 days and they're trying to implement that on a fifth day itself and expecting a huge returns. Now that doesn't happen, let me tell you that. But if you really want to pay attention what Elliott wave is and you have to understand the depth of it, it can actually give you the tool to forecast the market. You can actually go back to our weekly updates or maybe the trading room videos which we post. You can see how beautifully we are expecting and we are forecasting all the impulses in the direction of the trend based on the structure or the pattern we see. So what it is and how you can actually use it in order to maximize your analysis, you just need to start by piece and one thing at a time. All right, people are mixing with many things at single time and I'll show you why and I'll show you how do they mix it. So today we are actually starting with the flat corrective structure. It's very simple. I don't know why people take a day or two. I'll teach you that within this video itself. So there are only three major flats which Elliott actually described and I have already drawn it. You can see in front of you there are three flats and this is the concept of that. So keep in mind, you have to keep the concept at your fingertips. The reason people might be struggling applying the Elliott wave because they don't know the structure properly or they don't have the rules at the fingertips. So you have to understand and you must know all these rules even if you're sleeping. So if you're sleeping and if somebody wake you up and ask you about those rules, you should be able to tell within a second all those rules. So if you can do that, you can go to the next step. All right, so let's start with the bull market. Let's start with the impulse up. How does the flat corrective structure look like and how do you actually read it? It's very simple. After an impulse, you will have a three-wave corrective structure, 1, 2, 3. You can call this ABC. Now labeling is totally up to you. How do you want to label it? We don't argue that, but Elliott said it's ABC. And now don't mix it with another concept right now. If you're watching about flats first time, if you're learning about this and you're new to this, don't mix this theory that this wave should have 5 subwaves, this has 3 waves, this also has 5 subwaves. Now you're mixing that at a time without practicing this basic concept, and that is the major reason most people are not getting it, because trying to implement too many things, a big red flag from my side. All right, so in a flat corrective structure, it's very simple. You all have 3 waves. You can see that. Now in those 3 waves, you can see they are slightly different. So we'll call this as a regular flat. We'll call this as a expanding flat. And we'll call this as a running flat. Why so? Let's see. So we have a bull market. We have an impulse up. We have the A wave. And then we have the B wave, which actually comes close to vary this top. And then we have the C wave, which also comes close to vary this bottom. Now pay attention, this doesn't tag this, which means this doesn't come out of this like this, and this also doesn't go below this level. So this is A, this is kind of B, and this is C. So whenever you have this kind of formation, forget about the subwaves, the major waves. You'll call that as a regular flat in relationship with this impulse. So what's after that? You're expecting the next impulse up. If you go to the next one, expanding flat, very simple. You have an impulse up, you have the A wave, you have the B wave. Now this time the B wave actually goes above the impulse. So this is A, this is B, and this wave you can see it's went above this area. Once it does that, you no longer are looking at this possibility. Alright, then you have either this possibility or this possibility. Let's see what it is. Now when you have the C wave and that actually comes below to A, you're looking at something which we call expanding flat in the market. Again, forget about the subwaves of it, just pay attention to the major waves. Keep these rules at the fingertips, and this thing can give you tremendous improvement if you are trying to learn the Elliott wave. After this corrective structure, again you are expecting the next impulse up in the direction of previous impulse. Last but not least, we have the impulse up, we have the A wave which is coming against the impulse, A wave, and B wave is actually breaking and tagging the top. You can call this B. Again, you are looking at these two possibility. This is actually neglect now. Now pay attention on this C wave. Once it goes down and this doesn't come to the bottom of it, and from here onwards the next impulse appear, then actually this is actually a difficult pattern for the beginner how to trade it. But yes, these patterns exist and these patterns do repeat very often. All right, so something like this, if you found, you'll call that as a running flat, and boom, as simple as that. You have learned all the flat patterns which we also use in our analysis. The basic concept, this is how we follow and this is how we know it, and these are the rules which every wave trader is following it. All right, don't mix it with another rules. Don't go into over complexing things. As of now, I'll show you what's the complexity when we look at the examples. So that's the uptrend. Definitely, if we talk about the downward trends, I have also made that possible for you. Now actually you can actually look at that, and by this time I think you should be answering with me, what pattern is that? We have the impulse, we have the A wave, we have the B wave, it doesn't go below this. We have the C wave, it doesn't go top of that. What are we looking at? Your answer should be as a regular flat. This is the A, this is the B, and this is the C. You're expecting the next impulse down after that. Another pattern, we have the impulse, we have the A wave, we have the B wave. Now this B wave actually broke a tag the bottom of previous impulse, and it actually went up and actually tagged the top of it. So this is the A, B, and C. Your answer should be at this point, expanding flat. You're expecting the next impulse for the downside after that. Last but not least, you can already know it, but let's look at that. You have the impulse, you have the A wave, you have the B wave where you have tagged it and you are actually going up. But this time you actually fall below to this point, which means you are looking something at which we call as running flat. So this is the A, B, and the C. So that's how you look at flats in the downward direction. That's how we look at flats in the upward direction. The bottoms are the ups for the bull market, these are for the bear market or for the down market. All right, so let's look at on our dearest market, Nifty. Let's start. You'll find it tons of it on any time frame, any given point. If you look at that right now, can you see it? If yes, then you should be looking at something like this. This is your impulse. You have this one wave down, one wave up, one wave down. Pay attention what they have done there. They have tagged this, they have not come and tagged this. I'm using the drawing tool, but if you exactly pay to the pinpoints, we follow the rule very carefully. You can see there is a gap there, right? So what do we have? We have the impulse, we have this corrective structure which can be divided in 3 waves, and you tell me from this points onwards what corrective structure you are looking at. I would be waiting for your answer in the comment below. What corrective structure is this for the next impulse up? All right, so that's one corrective structure. So if you just go below a little bit to the left side, and if you pay attention on this impulse going down, you have this impulse, you have this wave up, then wave down, and then wave up and then wave down, right? So when you look at that, this has already violated the bottom of it, and you can see there is still a gap there. You see there is a gap. So that's another flat you're looking at in the downward direction. Now in the comment below, those two flats are same, so I guess your answer should be same. I'd love to read the comments what corrective structure you're looking at in those two examples. Let me show you one more. You see this going up impulse? If you zoom in and if you pay attention on this impulse up, you see this wave going down, this wave going up, this wave going down, right? So let's zoom in and let's see what they have done there. So when you look at that, it has come to the zone and it has tagged it, and this has actually come to very close to this zone, but there is a gap by a pesa. Like this is actually some point up. This is like you can see 85.80. This is actually 87.55. So by 2 points there is a slight gap. So all three patterns which I showed you right now qualified as a one single corrective structure, right? And you can go on and on and on every time frame, any script, they all are universal. Alright, so alright guys, that's all corrective structure, the flat corrective structure from our side. I would love to see the answer, what exactly pattern you're looking at down below at the comment. If you like this concept, if you want to see more educational video from our side, give this video a thumbs up and I'll see you in another video. Thank you so much. Bye bye.